So I mean, one of the things that have been doing the rounds quite a lot, and there's been quite a lot written about this, is capital gains tax.
Oh yes, yes, Tom.
Um, so I think this is something that Rishi's been quite keen on anyway, as I understand it. I think he commissioned a report to look at it, which the Office of Tax Simplification sort of had a look and produced a report. And from what I read, effectively they came back fully supporting a reform of capital gains tax. So it's difficult to see if Rishi himself is sort of like, keen for the idea, and he's been supported almost by what the OTS have come back and said. It's difficult to see that won't go up at some point. But, really, I think politically it's probably an easy win for it to go up, because it doesn't affect, relative to income tax, it doesn't affect a vast number of people. But because of the differences between CGT rates and income tax rates, putting those up, and obviously also factoring in the sort of amount that's involved in a lot of capital gains, it would be a massive tax intake for the government if that went up.
So it will have a big impact on tax revenue for the government.
Yeah, but from stuff I've read, I can't remember off the top of my head the exact figures, but I think it will make a massive difference, just because obviously when you're talking about capital gains, you are talking about typically high value items. So, it could be, I don't know, a second home or shares in a company, whatever it is. Typically, they are high value items that are involved. So
high transaction value, basically.
Yeah, exactly. Yeah. So even a sort of slight increase in those rates is going to have a big impact on tax revenue, but that will only affect a relatively small number of people. So it's probably a fairly easy win for him, from a political perspective, I suppose.
I just interrupt you there briefly, Tom, because the other day, obviously we do a little bit of preparation for these things, especially you. I know you're a key man for detail. I then read an FT piece about capital gains tax, where apparently there was an unnamed quote from the Treasury said, "Oh, that OTS report, yes, they're just a bunch of bureaucrats, pen pushers,
right,
and idealists." And that doesn't mean to say that we're taking the CGT recommendations seriously.
Is that right? Yeah.
It's typical, isn't it, with the government? They get a body to, go out and make recommendations, and it's all smoke and mirrors.
Yeah. It's a difficult one, isn't it? Because I think, again, some of the stuff I've read I think it might have even come out of that report, was sort of kind of suggesting that people are sort of organising their affairs to effectively turn what would otherwise be income into capital, and therefore pay the lower rates. I think is the main driving force behind this. So for example, you might sort of realise a gain on some shares that would otherwise, it would have generated you an income, and as a result, you pay a lower rate of tax. So I think that's kind of the main driving force from what I've read, which I guess would then tie into why the talk is of aligning capital gains tax with income tax. So then you kind of you remove that sort of incentive, I suppose, to kind of organise your affairs in such a way to move stuff that would be income otherwise to capital.
There's an element of sort of marshalling tax avoidance to it.
I guess kind of. Yeah, I mean, it's all legitimate. Obviously,
feel free to correct me. Obviously,
it's all completely
terminology. But,
no. I mean, it's what's being done. There's by letter of law, absolutely nothing wrong with organising it in such a way. But I think that the argument from the report is that effectively we've got a loss in tax revenue, if you like, because it would otherwise be taxed as income tax rates. So I think that seems to be the driving force behind it, which is why you'd be looking at, I think, the top rate of capital gains tax, if we take avoiding residential property, is about 20%. Yeah. Well, if you align that with income tax, and someone was let's say an additional rate taxpayer, that would go from 20% to 45%. So we're talking, it is a big increase.
That is significant, isn't it? That is very significant. Yeah. Okay, so say he goes ahead with that.
Yeah.
When he introduces, because he might announce at the budget, but then there might be a time frame before he introduces it to give people time for planning.
Yeah.
What sort of things, remembering our disclaimer from earlier, what sort of things should people be thinking about and talking to their advisor or advisors, such as yourself, about
I mean, the main thing really is going to be about timing of when you realise gains, I suppose. So if you know that you've got you're considering some sort of disposal of a capital asset, there might be a question as to perhaps bringing it forward, or when the timing of that might be. It's going to be the main thing here, really. I mean, there is talk as part of this of reducing the annual allowance. So at the moment, it's around about £12,000 a year. I think it's 12,300 this year, tax free. So there's talk of bringing that down as well. So again, that will potentially have an impact as to when you realise gains, possibly. But again, I mean, it's one of those things really where you kind of need to be talking to your advisor about it, quite frankly. There's so many varying factors with all this, and as we said at the start, it's all speculation. You really need to kind of reach out and speak to your tax advisor to kind of discuss your own personal circumstances, really.
Yeah. Well, on that note, I should say, if you're wondering about capital gains tax and want to know more about it and all the details around it, then be sure to check out the Wellers blog, wellersaccountants.co.uk/blog. And the name of that particular one is "What is Capital Gains Tax in the UK?" And that explains everything. No doubt after the budget, we'll have to update it with the latest figures and the allowance. Who knows? We shall see.
Yeah.
So anything else on CGT, capital gains tax, Tom?
So the final thing that was quite interesting, actually, I was reading it kind of links into the next point that we'll have a chat about inheritance tax.
Brilliant. Yep.
So one thing that the OTS report suggests should be looked at is removing the CGT uplift on death. So at the moment, where someone has a capital asset that they hold up to the point of death, if there's an underlying gain within that effectively gets wiped clean, for want of a better term, on death. And then whoever inherits the asset would get an uplift in the base cost to the market value at that point. So what the report is talking about is effectively taking that out. So there would presumably then be capital gains tax on death. And I think, from what I understand, the main driver...
CGT on death?
Well, I assume. I mean, from what I've read, I mean, I didn't see the detail of it, but I assume if they're talking about removing it, there would effectively be a capital gains tax on death. Before then, the whoever inherits the asset gets the uplift to that market value, right? And I think the main sort of, I guess, focus with that is that it kind of encourages people to hold on to assets up to the point of death, because then it wipes. Effectively you wipe away the capital gains tax that's underlying, possibly. But again, politically, then it means that assets aren't being passed down generations when perhaps they might otherwise be, more useful, if you like, if that makes sense. So again, it kind of it strays into inheritance tax a little bit, which we'll talk about in a minute. But it was just that was quite an interesting point I was reading about.
So I guess to finish off, it's this is a tax on wealth, so to speak.
Yeah.
And that may be more politically acceptable because it's seen to be making the rich and wealthy pay, which has been a debate for the last decade.
Years and years. Yeah.
So there's quite a bit of planning around that, quite a bit to think about, and even start considering now.
Yeah, absolutely. Yeah.
Talk to your advisor. Again, the stuff to do with inheritance tax is covered in that CGT blog post I was referring to earlier. Go on, Tom.